Right. Hello, welcome everybody to this backtesting session. So we're gonna start doing today a backtesting using the smart money concepts, and I'm gonna do it in the Euro USD. All right. So let's start with this and let's go into it. So I'm gonna select randomly a certain date on the market date. Let's go for I don't know. Let's go to March. Let's see what happened in March. Let's say March, April, March 16th. Let's go to March the 16th. That's a Monday. So let's see what actually happens. No, let's go to Sunday. So it's easier for us to make the analysis. All right, so here it is. This is Sunday, March the 16th. And let's try to analyze what actually happens here. Okay, so uh, let's start and make the general context of this order, and then we start executing orders. Now we are in this moment in a bullish range in the Euro USD at this time, definitely. So this is the beginning of a range. We have a break of structure, then this is liquidity, and this is the complete impulse. Right now the price has done a retracement really fast, and now it's in this zone, which is having it's a potential zone of a reaction. So we may expect the price to continue pushing up or continue with the downtrend, right? Um, so this is it. So in generally, we're bullish in a bearish retracement. When the price breaks this low with the bottom of the candle, it would mean that the trend line has changed. Okay, this one. If it is broken with the bottom of the candle, right? So let's go to 4-hour time frames and let's see what actually happens here. Definitely it's bearish. In 4-hour time frame we're completely bearish. What is the thing going to see here? Oh, this is the thing going to see. The price is going pushing downwards, which is where is it? The beginning of a range, which is right here. Look. This may be the range beginning in 4-hour time frame. Uh, no, well, I don't like one thing about this. No. Okay, right. If I take this order block, no, this is not the range beginning, unfortunately. This is okay. So this is not. It looks like one, but it's not. The real range beginning is right here. Boom. Here is range beginning, and now from that point downwards, that's this is the 4-hour range. Of course, it's completely bearish. Let me readjust this. So it's bearish, and it's not in a bullish retracement yet. So it's like starting. It seems it gonna start, but we're gonna need to be aware about it. Perfect. This also looks like a range beginning in 4 hours. I'm gonna mark it here, but I think potentially this will be diminished, definitely. Mm-hmm. Let me check one thing on daily time frame. Ooh, nothing really clear. All right, look at the next. All right, if I update a little bit more the price, this may be the range beginning in 4 hours, right? This high. So from this point upwards, we will wait for a possible retracement of the price, right? Let's see. This is the boss. Yeah, here it is. So, okay, what I'm expecting for the price to do in this point? Well, here we could wait for the retracement of the price and then continue going down, or simply the price could make the retracement and boom, continue pushing up. We will need to be very aware about it. Also, we need to understand that this is a daily order block, but if we refine it to 4 hour time frame, let me try to refine it. There you go. Okay, the price is in the daily order block refined to 4 hour order block. It means that if in 15 minutes we have a confirmation, it means that the price likely can go up, right? And continue with the retracement, right? Okay, so this is it. 4 hours bearish. Let's go to 1 hour time frame, how it looks like. Well, in a 1 hour time frame, it looks even clearer. So this is definitely the range beginning. The price is actually reacting on this small order block, which is right here. Probably in 15 minutes, this looks like a proper order block. This one, look. Yeah, yeah. There you go. There it is. So that's the range beginning in 1 hour. I would say that this is rather the 1 hour range, which I feel more comfortable with. I think it's a it's a better point of reaction. Here it is. All right, so let's put it here that this is the 1 hour range. I'm gonna put 4 hours, but I'm gonna put slash 1 hour. I'd rather prefer the 4 hour range, the one which is right here, this one. And all of this is liquidity, by the way. And now let me check, and I want to see one thing, and it is to refine the order block we have here. Not that clear, to be honest. Not very clear, as I wish it would be. I'm gonna put it here. There. Let me check if the price actually gets to that point. It did. All right, so look, we refined the 4 hour range, the 4 hour order block to, sorry, the daily order block to 4 hour order block to 1 hour order block. So all of this is following a certain pattern, which is the point in which we're gonna have a reaction, right? Hello, Margin, Call, Spin, everything good. Thank you for being in the live. What's going on here? Right, so here it is. So we have so we're creating the context for this session. So as you can see right here, we have the range beginning in 1 hour time frame. This is the bearish impulse, and here the price is actually having a reaction in an order block of daily, 4 hour, and 1 hour. So I mean, the bull rate has not started yet, the bull rate. So we're gonna need to be aware about the bull rate right here. So this is all the context we need. Right. So we're about to start. We're about to start the session. Putting orders in the real market. Let's say, of course, this is a simulation. Don't take me wrong, but this is how we actually would execute orders. So let's go to 15 minutes time frame and let's do the same exercise, which is try to find the range beginning. And if we go here, we started. We need to start. We need to analyze the range beginning here in 15 minutes time frame. What is my strategy? I use smart money concepts to understand how the market moves. And within the smart money concept strategy, I have three. Yeah, I would say three. I have three patterns or three setups that are the ones I work with. which are the ones I'm gonna keep using in today's video, by the way. So here it is. Look, this is the range beginning. This also could be a range beginning. This one here, this beginning of the range right here. But to be honest, I don't like it too much because this is too. There is a concept that I call, which is called liquidity. So all of these highs that are accumulated, for me, won't be respected. So the price can come here and it can take those out, right? Yeah. Yeah, nice. Do you use any strategy? Do you understand smart money concepts? Or do you use any other strategy? Remember that there are plenty of strategies out there. Smart money concept is one, ICT, the market makers, Elliott waves, Wyckoff method. There are plenty of methods to understand the market. My suggestion is that we should use the one that we feel more comfortable with. So in your case, what are the ones you use, guys? Work. Great. So this is the range beginning in 15 minutes. As you can see, this is the direction. It's still bearish as well. And look how interesting. Well, here we have liquidity. This cannot be the range beginning because it has not reaction or not order block that back this up. So that's why I didn't put it. So far this is the beginning of a range. Now what I'm expecting here, again, I would need a confirmation in 5 minutes in this order block, and I will buy the retracement. And I will pay attention to some reaction areas like this order block, for example, or maybe this one. So I'm gonna mark them here just to bear them in mind. And I'm gonna see the reaction of the price later. So this is a job in which we need to be very attentive in the reaction zones, right? Although I don't mark any order block here because again the liquidity. So that's why. Right, let's keep going. Right, so let's go to 5 minutes order block. 5 minutes time frame, excuse me. And here I will wait for the confirmation. Now let me check the range beginning in 5 minutes. I think this is the range beginning in 5 minutes. Yes. Do I have another one clear? No. All right, so look, this is what I'm gonna do. I'm gonna wait for the price to break this high, which is the 5 minutes range, and after this I can start buying. Otherwise, I won't. I will be patient, and I will wait patiently for the entry point. So look, I execute orders in the New York session. So, and this would be, which I think here. Monday at 7 a.m., which is the time I start executing orders. Here it is. Okay, so let's see. Let's go. Let's see what happens. So remember, this is the analysis and this is the context. I'm gonna put the context from from 1 hour time frame. In 1 hour time frame, we are in a bearish impulse like this, right? In 50-minute time frame, we are in the same range, which is this one. It's going down. And in 50 minutes, we are also bearish, right? In 50 minutes, we're also bearish. So it means that the price will start something that is called a bullish retracement, right? So I'm gonna write it here, a bull rate. and I'm gonna wait patiently to see what actually happens. All right, let's go to 5 minutes time frame to see what actually happens. Let's go. All right, so look, this is, I would say this is London session. Not yet. All right, I think this is also, this is Tokyo session. Tokyo, I think so. Yes, and we would start. Okay, here is London session. So the London session, we started from this low. There we go. There we go. There we go. All right. So the price has got to the order block we marked here in the London session. At this moment, I wouldn't be able to execute any order because I'm still not active. But this is very interesting. I'm gonna let you know in a minute why. Reach begin. 5 minutes. Right, not clear. All right, look at the next. Now it's time for us to start executing orders, right? And I'm gonna execute orders until, yeah, until 12 midday. So it seems I will be like 4 hours more or less executing orders in the market. I'm gonna turn this off. Right, so look at the next. We have this. This is the scenario we have in 50 minutes. In 50 minutes. So I would expect for the price to get to this liquidity or even here, right? And in this point, likely the price will come here. There. Yes, so this is the point in which I will wait for a reaction of the price. And also here, but I want to see one thing. And it is, I will need the breakage of this high in 5 minutes range, or I can take advantage of this mini impulse from this point to this point. Also look at the next. I'm gonna, well, no, 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 no. All right, let's see, let's see. We are here. This is an order block trump. Uh-huh. And now I need to watch something very important here. So in this moment, I want to use one of the methods that I use to execute orders. And assuming I have just 4 chances to execute orders, this is what I'm gonna do. Order block trump, no reaction at all. Not very clear, right? Let's the price. I'm gonna let the price to develop itself. Okay, it's having a reaction. All right, look here. The price allows another order block trump. This one is clearer. Right, so this is one of the methods I use. So once I understand, I find an order block trump, I would look for a range beginning in 1 minute, which will be this one. Yep, there you have it. And now I would look, and this would be my order block. Here it is, range beginning. Then I have a boss, then I have a breakup structure, and then I would put this. Now, since I have this new range beginning, boom, it has reacted on this order block trap, and this is liquidity prior to the entry point. Is it? Yes, it is. So I'm gonna put my order right here. There. Mm, there, 3.5 pips. Let me check one thing in 5 minutes. Is this a block? This is a block. It had a reaction. Good. It can be a new range, 5 minutes range beginning. All right, okie dokie. So this is what I'm gonna do. And let me check one thing before. All right, look, this is an order block, a 1 hour order block. You see? So now that I have my complete confirmations, I can execute this order properly. I will check the liquidity that is in this high and in this high, and I expect the price to get to this order block, 1 hour order block, or even above, which is this one. And I will see, what actually happens. So let's go. So first take profit will be here in this high. There I have a 1 to 4 risk reward, and this is the next one, which is a 1 to 7 risk reward. All right, let's see what happens. All right, since the price entered the order, I know it didn't enter. Open it. It opened the order. Will it take us out? It almost take us out, right? As you could see. Now, this is the thing. If the price breaks this high with a body of the candle, I would need to put the break even. Come on, come on, develop itself, develop itself. Let it be, let it be. Now look at the next. The price has got to these highs right here. So many people are watching here a triple top pattern to sell, and they are selling. That's why we got this reaction. But let's see what actually the price does after that. All right, boom. Now they are out, right? All the people who were here buying, they're out. Now I'm gonna put my break even for one reason, and it is that the price has already got to the here is has already got to the has already broken this high, and my last take profit will be right here. So let's see if the price actually does it or gets to that point. Boom, it breaks the high, the first high we were expecting for the price to get, which is positive for us. There we have it. 1 to 7 risk reward order, and it was all of this. If you have followed the first 20 minutes of this class, you have seen how I execute this order using the booster method. And now we have 1 to 7. So if I've been executing, for example, this day I'm out. I have already executed everything that I needed, and this is the small trade I got. That's it. I don't need to work more today. Ideally, I would have put the block here or even here. No, even here. Even here. And that would be a huge fifth. It would be like 1 to 15 order, but that would be a lot to risk. And since since I'm already out for the price, that's why I'm gonna do. That's it. All right, you see, look, the price actually reacted in this order block we marked. And look, now if I have put my take profit this high, now my next work is bear of this volatility. And also accept the fact that the price would take me to break even, because I think this order went to break even. Did it? I think this order went to break even. Oh no, almost break even. Anyway, we're out. And we got the 127 we got before. So we're fine, we're good. That's what we wanted. 127, nothing else. That's it. Now let's go to the next day. Let's go to Tuesday, sorry. Let's go to Tuesday. Tuesday, ain't it? Yeah, there it is. Right, this is the Tuesday. Good. Let's keep moving. So look, for example, if we have left the order to the 1 to 15, we would be in break even because the price moved down and took us out. It's normal, it's part of the volatility, and we need to be actually we need just to accept that. That's it, as simple as that, right? Anyway, let's see next day. So if we want to, every day we need to be aware of the context. Now let's try to update our ranges. So 1 hour range is still bearish, but now in 1 hour we are in a bullish retracement, right? So in 1 hour we're in a bullish retracement, and for sure in 4 hours as well. This is the same range. Now this is the scenario we got in 1 hour time frame. A reaction here, boss, and this is the order block. Now the price is reacting on this order block in 1 hour, and that's why we got such a reaction, which is this one. That is the reason why. Excellent. Now that we understand why the price is moving that way, we can calmly go to 15 minutes time frame and start analyzing the other aspects of this order so far. So also one of the reasons we need to understand it's why the price is having a reaction here. And if we go back to the price, we can see that the price is actually reacting on this order block that we got here. There we have it. So in this order block, and this is why, and now it's the same scenario. We're just executing orders against the time, against the trend line, right? We're executing orders against the trend line. But the thing here is that we want to see, or we would like to see, let's say, mm, the clearest opportunity to buy. Okay, this is it. Right. So let's go and let's wait to the proper time to actually execute the order. So this is London session. London is pushing up. This is what actually happened, which is very cool. This is something I was expecting to happen. So this high will be our point to be mitigated. Not mitigated yet. The price is having a reaction. It's going downwards. Maybe in a moment it will be mitigated. So this is the scenarios I like to see. because for my point of view are the most profitable ones. Now, this is the point to be mitigated. But if you can also see here, we have another point to be mitigated and these highs which are located here. So all of this is liquidity. It's money trapped by the price right here. So in this high, in this high, in this high. So a regular trader, when I say regular, I'm talking about like a day-to-day trader like me, for example, but that unfortunately doesn't have the correct information, would think in the next way. They see this bearish impulse, and then they see this resistant resistance level. This will be a support. I don't know how they call it. But more than that, they see this one, two, three touches. So they would say, "Oh my gosh, this is a triple bottom pattern. This is where I'm gonna sell." To continue with the impulse, right? I mean, the logic is not bad. The logic is really, really understandable. The thing here is that they don't understand the concept of liquidity, neither that we are in a bullish retracement. This is a bullish retracement, right? And that there are points to be mitigated and where the price will be effective. So maybe they have a clear intent of the direction in a bigger time frame or a big picture, but then when they go to the small picture on the lower time frames, which is the place where we put the orders, they don't follow it properly. Right, anyway, let's go. This is Tuesday, right? Tuesday. Let's go to Tuesday. 5 minute time frame. So look the logic behind all of this. This was a 5 minute range beginning when with the price opens or order. It went and pushed up. Then when the price broke this with the body of the candle, boom, it started to become a bearish 5 minutes trend, right? But look at the next, what actually happens. The range beginning was here. In 5 minutes was here. Let me check if that was the beginning of the range or the order block that backed this up. Almost. Almost. This is liquidity, that's why I enter here. I'm gonna grab this black candle as the order block. And there we have it. This is almost the point. There is. Alright. Supply. Perfect. So this was the order block that causes this movement. But then what happened after that? The price broke it with a body of the candle, which means that is now a bullish impulse, right? Boom, in 5 minutes time frame. And what we are actually looking at here, it's the reaction or the point of interest. So one of the point of interest for me would be this order block, which is the extreme of range beginning. Yep, this one. I like this one because all of this is liquidity prior the order block, right? However, there are another interesting point of interests like this one. Look, this is the progression that we call order flow. One order block is mitigated, and this order block mitigates another order block right here that allows another order block, which is this one. There we have it. So we have a decisional and an extreme. And another thing I would like to see is the 50 minutes range. So in 50 minutes range, we have, or in 50 minutes time frame, excuse my language, it's the next. This is the 15 minutes range beginning. I told you, I know, wait, this is the 15-minute range beginning, right? It's bearish. However, we have tons of liquidity trapped here. What I want to see here, at least here, is a 5 minutes confirmation, or I would let an order here. Yes, I would put an order at risk here. I need to see imbalances. This is the imbalance we have here. Liquidity prior to the entry point. And there we have, that would be enough. Also, we have this reaction point here. But okay. So this order would be at risk. It means that I would let it there, and that's it. If I want to cover everything, this will be the amount, 12 pip. That's too much for me. I would put it really close to the price, 4 pips. Yeah, this will be the order at risk. Yes, I'm gonna put it there. And here I would wait for a 1 minute confirmation. That's it. All right, now on the other hand, if I had if this would be a real order in the market with this 7% I done in the previous order, I would be out. I wouldn't work more this week because I have hit my objective of the week. Anyway, but since we're just practicing, we're just trying to take all the opportunities that the price would provide us, right? So here it is the time. We are in 6 a.m. New York time. So I'm expecting for the price to get to this order block, and I will wait for a 1 minute confirmation. It seems that the price won't do it. Yeah, it didn't do it. So look what the price did. The price had a reaction, pushed down, and here it continued pushing up. It's normal. That's what we think in 1 minute. Then we go to 5 minutes time frame to check what has actually happened. The price is just, look, when you see that the price does the next, like this consolidation, this is like the movements that creates the most anxious in us as a traders, because it's annoying. I know it's actually very annoying to wait for actually the price develops, but we need to be patient. We need to understand that it's not when we want, it's when the opportunity shows, right? Let's see what happens. Boom. So what happens with this? So you would say, okay, Manuel, yeah, you were right. So the price actually took the liquidity of this highs, but unfortunately we weren't able to execute any order, and that would be right. We will be actually very right. But there was another opportunity, and the opportunity was right here. I didn't spot it. I just saw it now, which is another booster method order block. Look, when the price enters in this block with this movement, it allows, yes, wow, what a beautiful order. Look, we have here order flow. Then we have a range beginning. For me, that was too much liquidity. That's why I didn't consider it as an opportunity. This is the range beginning, and then it entered here, and it came back to the range beginning order right here, to the order block, and that's why the price got such a reaction going up, and then continue with the impulse. Yeah, that's the reason why the price continue with this. Well, let's see what actually happens after this. This will be a, like a point to execute orders downwards. So let's see what happens. Let's see what happens. The price is pushing up. It's going downwards. What time is it? 10:15. Right. So look at the next. Here we have another opportunity to execute an order here in the market. And here it is. So after this breakage, this low became the 5 minutes range, and this low became the strong low in 5 minutes. Perfect. Now the next point to be mitigated should be this one. Until this block. So we can take advantage of this movement. Let's see if we actually can do that, or if the price would just continue pushing up without us. Right, so this is another block that I am marking because there we have order flow here and here. This order block causes this order block, and we have prior liquidity. So I think this is what I would say. Here is a potential entry point, but since we are very, I don't know, should we risk or not? Since this is also a 15 minutes time frame order block, here I would wait for a 1 minute confirmation as well as here. But honestly, guys, I think if the price pushes down, we'll have a reaction and it will go down, maybe to this order block or even to this one. Yeah, let's see what happens. Well, no opportunities for us left. No, no, now we're out. Perfect, it's fine. So on Tuesday, we didn't work. I mean, we did work. We did the exercise of analyzing the price, being there, try to find the best opportunity. Since the price didn't allow us the opportunity we wanted to, well, it's fine. It's fine. We at least were right with the direction. Now let's see what happens. I think that by this time, the price would respect this order block a little bit, have a profound retracement, and then it will continue with the bullish retracement. So let's see what time is it. We are 15. Okay. All right. So now look how interesting. Okay. Let's see. This is the Tokyo session. London session has started, and look at the next. The price has left these highs. So those are the highs that I consider will be mitigated by the price. And now look this order block. Remember this order block we marked? I said to you, it would be better to find a confirmation prior entry to that point. The price can do two things in this session: go down and had a really nice reaction and continue pushing up, or take it out and go downwards to this order block we marked. But let's see what happens. Nice reaction. And now look at the next. Now we are in the order block. Now this order block we marked wasn't open at all, but was the zone in which the price had a reaction. This is 15 minutes time frame here. Yes. Nice. So the price actually went to this order block here, and then it make a breakout. After this breakout, the price pushed down and react on this order block decisional, and now it's pushing up. Good. There we are. Perfect. Now this is the scenario we got, and this is what I want to see. It sounds super, super, super selfish to say that thing. Well, the scenario I would like to see. Yes, because I'm not the creator of the market. I don't know what will happen after this. Uh, Supply. I know, sorry. Order block Trump. Mm, right. So let's go back to 1 hour time frame to see what is the context of this order. I'm gonna turn this off. Right. So this is where we are. Look, we are in a bearish impulse in 1 hour time frame, which is this one. And now the price is making a bullish retracement. Now the price is actually having a reaction in this point because here we have an order block of 1 hour, and also we have a 15 minutes range beginning, which is this is the range beginning. We have already analyzed it. Now what I see here is that we have liquidity above the range beginning in 50 minutes, which is this one. I see liquidity trapped here. This is liquidity accumulated. So I think personally, if the price doesn't break a 5 minutes range here, the price will continue pushing up. I would take the liquidity that is above this high. I would take this one. I think it would react in this order block. This is the order block I would like to see a reaction. It's not the one it would be. I'm not so sure. I don't know how the market works, but this is what I would like to see. Right, 50 minutes range. This is how it looks like. Look in 50 minutes time frame. 50 minutes time frame where the next we have this impulse and then the bullish retracement, which is getting closer to our order block. Now it took all the liquidity that was above above these highs. It took all the liquidity, and that's it. And this is a potential new range beginning. If the price breaks this with a bottom of the candle, if not, this one will be the range beginning. Yeah, that one. All right, and now let's go to 5 minutes time frame to check and see the range, the proper range. So it was the range. It was the range beginning. Continue pushing up. It didn't enter here. Let this high. It becomes liquidity. Break this high with the body of the candle. Perfect. Then break this high with the body of the candle. This became the range beginning in 5 minutes, and then it reacted in the order block. Make the boss. Boom, this boss. And now here we are in a retracement and in the range beginning. Now, unfortunately, we weren't on time to put the order here. That was at 6:30 a.m. We weren't there. Now we need to wait for a confirmation and see if we can actually grab an opportunity to be in the market, right? This is all the context we need, and we need to understand this clear the market so we are actually competent on this. Now, another possibility is that the price come here to this order block in 5 minutes, which is not mitigated, and in which I would put order at risk. there. I'm gonna put 4 pips. Why should I put an order here at risk? Because this is liquidity and the price may go down. So let's see what actually happens. It's pushing up. You see the price didn't get to our order block trump. What it means, it just continued going down, and look what it's gonna do. I think, and this is my perception, I don't know what will happen next, but this will be taken. This will be taken. This is liquidity. Right. So it took the liquidity of this low. Who knows what will happen after this? Who knows? Right, it's going down. Did you open the order? No, not yet. It didn't open it. Wait, hold it. All right, it's opened. Gosh, oh shit, we're out. Right, normal. That's normal. Right now we are out. It's okay. It's normal. It happens. So we're minus 1 order. This is a range continuation. Yes. Let's check one thing here. No, I will wait. I will wait for an opportunity here. Oof, it's crazy. The order at risk should have been this one as well. This one here. Order block. Yeah, liquidity prior the order block. There. Right, so this is a potential entry point. We were out with this order, and I want to see one thing before liquidity. No, all right. So I think the price will get to this order block. Let's see what happens. Okay, this is the order block we thought it would work. Now it's out, and look, it reacted on this order block, the one we were expecting, right? So since this is a 50 minutes order block, I need a confirmation. I cannot enter just right away because it's dangerous. It's dangerous, my friends. I see. Look, it came here. You see? Oh, it's super precise, right? Right. Let's wait for a confirmation in 1 minute, and that's it. Um, yeah, we need for the price to break this high here. This one or this one? Oh yeah, this one. Uh-huh. If the price breaks this with a body of the candle, that would be a confirmation for me. Anyway, let it like this. Let's see. What time is it? It's Wednesday. Holy moly! How? Oh yeah, Wednesday. Yeah, it's the day we work today. It's 8 o'clock. Price is going there. This is going back and forth and e. Patience. Patience. That's a word. Be patient as F, my friends. We need to be very patient with this. All right. So look, it's all right. Almost, almost broken. Jesus. Patience, patience, patience. That's the word. Well, it seems this day will end up and we don't have the confirmation. And it was like that. Right, so this day ended up and we didn't get the confirmation we were expecting. So that was a confirmation we were expecting here. And also, another thing to analyze here is the next. Um, I said that this was the range beginning. When the price broke this with the body of the candle in our order, the we should have continued with the downtrend because all of this becomes as a liquidity, and that's fine, fine, fine. 1 hour order block. It reacted in this block. Yeah, 1 hour order block. That's why it pushed that strong downwards. And also, the price may go here where we have this order allocated. Man, I think I'm gonna let it there. It's like a really good entry point on an order block. And in this order block, we will wait for a confirmation in 5 minutes if the price provides it. Right. Let's keep moving. So this day we got -1 order, which is a continuation pattern. It was a continuation order, right? Yeah, let's see. I let the order here. I'm gonna let it there. I like it. So just let me adjust one thing before it continues moving down. And it's the order. Okay, no, that's fine. Gonna let it there. See. All right, you got opened, and now we're out. Yeah, I continue pushing down. It's fine. So there was another continuation order. Yes. Perfect. How many orders do you execute per day? It would be better to execute just one per day. There we are. So look what actually happens. The explanation why we were we were part of the liquidity was because the price entered this 1 hour order block. Since the trend line is bearish, it will just continue going down. Simple as that. Now we have another potential reaction points, which are the next. Look, we have order flow here, and we got order flow here. This second order that I put, I need to admit it, that was, I would say it was FOMO order. Yes, because I wanted to see if it was a bet rather than an order. So my bad, and we need to learn from that, right? Perfect. So let's see what happens. Price is going down. It's Wednesday. Retracements. Here we are. This is a 1 hour, 50 minutes. Let's go to 50-minute time frame, how it looks like. So let's readjust this scenario. So this was the 50 minutes range. Now it's broken with the body of the candle right here. Boss. We need to turn up the tables. Now we need to see the real direction of the market now. And we are in 50 minutes, we're bearish. Yes. took us out, continue pushing down, took out the money that was allocated here. It went down. All right. It's reacting on this order block. Not that clear for me. Yes. Right. Right. So look, Tuesday. Here is the day. Right. This is the only thing I see so far in 1 hour order block. I would expect a reaction on this order block, but first I would need a confirmation in 5 minutes. After that confirmation, I can continue buying. And to sell, let me check one thing before. To sell this point. So this was the 5 minutes range. Wait, no, this was the 5 minutes range. It was broken with a bottom of the candle, then it became the range. So here it is. This was opportunity I lost because I was looking for buying. At the market. This was the opportunity I lose. That was boom, going downwards. 5 minutes, perfect. It break this high, then continue. It let a new range beginning, which is this one, in 5 minutes. There we have it, perfect. We update this one a little bit more. Then it went down a little bit more. And then it causes this high, but this high is not backed up by any order block, so it's just a simple high. But it made this breakout here. Same thing, doesn't means anything. Okay. Mm. Hmm. This day, what day is this? Thursday. Thursday doesn't look for me a really interesting day so far because the price is accommodating. It's not actually doing anything. So look, you see that the 15 minutes range is bearish. 15 minutes it's bearish. This is the 15-minute impulse. The price did this retracement, enter to the order block, and continue with the bearish impulse. Great. In 5-minute time frame, which is the one I'm actually analyzing the price now, the price has left this high, which is the range beginning in 5 minutes, and now it made this push down, right, to continue pushing down. But look, the price is here, it's consolidated. So this is the two things I need for the price to do something here, and it is that the price to even go up and have a reaction here and continue going down on this block, which is the one I'm gonna mark. Let me mark it here. Or another possibility is the price just came here to this order block and continue pushing up. Let's see what actually happens. But I would like to see also a confirmation because it's risky. Here we have also liquidity accumulated. Look, this is liquidity. This is liquidity. So I wait for a confirmation in what minute. I think it would be much better to see a confirmation in what minute to sell. Good, the price is pushing up. Well, the price didn't get to the order block. I'm speaking too fast. Let's see. Uh-huh. There. You see, this is the thing. That's why I didn't put an order here at risk, because I needed a confirmation. Since the price didn't allow us the confirmation, the price simply continued pushing up, and look, randomly I would say, it just started reacting upwards, which is fine. Now I would need for the price to break this high with the body of the candle, and I can see opportunities to sell, to buy, sorry, into the liquidity above the high, definitely. Mm-hmm. 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 Ah, that's why. Look, the price reacting on the order block of 4 hours. Perfect. Nice confirmation. Thank you so much, price. That's why it had such a huge reaction. This is something I didn't spot. Mm-hmm. Break the structure, make this boss in 5 minutes, and then we have the range beginning here in 5 minutes. Boom. Mm-hmm. And now we got the next, which is a continuation in 5 minutes. Uh, demand, and this is the continuation in 5 minutes. 5 minute continuation. Now let me check one thing in 1 minute. Right, the price get to this point. Also, let me check one thing here. This is the order block trump. Order block trump. Here it is. Five minutes. Okay. Mm-hmm. So if I refine this to 1 minute, this must be the order block. This is order flow, and this here is where the stop loss should be. 10 pips is a lot for me. 6 pips. Well, let it like this. 6 pips. Let's see what happens. Price continue pushing up. It's fine. Now it's making a retracement. Mm-hmm. Mm, no, I'm good with my scenario. Right, look what is actually price doing here. All right, I knew where the price reacted. And I didn't want it to put the order there, honestly. Here, good. I don't know if you saw this. Did you see this decision on here? There is the price reactor. That's why the price reacted there. But I didn't want to put the order there. For me, it was too risky. So that's why I didn't wanted to put it there. Anyway, now let's check here. It's reacting here, looking for the same opportunities, the same as well. All right, and here is another potential point to get where here. So let me check what 15-minute high looks like. People is selling or not? Yeah, people is selling. And let me check what 5-minute high looks like. This is the range beginning. Range beginning. Oh yeah, apparently. So this is where I'm gonna put my order now. How many pips? 6 pips. This is the order block. We have order flow. All right, now here is where I'm gonna put it here and here, there, and here. Yeah. Right. So this is the point. This is the point where I'm gonna put the order, and this is the high in which I'm gonna execute my order. This is the at this point we will get a 1 to 5, which will be actually good risk to reward ratio. And the last point would be where all this has been taken here. Oof, that would be a really massive order. 15 minutes time frame. Here, yeah. Let's see what happens. This is the maximum take profit, which it would be at 1 to 8. Okay, the price has left us in scene. The price actually got the reaction upwards, and unfortunately, I didn't want to put the order here, but that was the opportunity, and okay, that's why I didn't execute the order there. You see, I put an order here. Unfortunately, the price didn't activate it. The second order was here. I didn't want to put it anyway, and that's it. Good. What day is today? This is Thursday. Finally, let's go to Friday. Oh, Sunday. Friday, 6 a.m. So let's see what actually happens. So the 15-minute range actually will be broken. I think so. Yeah, in London session it will be broken for sure. Boom. Out. London session, it went up to this order block in 1 hour. And now the price is making a retracement in 1 hour. This is a 1 hour retracement. So I would think the order block in which we're gonna have a reaction would be this order block here. Even I have marked this one. All right. There we go. So we have this order block here, and we got this order block here. We're gonna see where actually the price will push down. Bro, I have many queries on the smart money concepts. Tell me, what are the questions you have, friend? Harsh Barsani, what are the questions you have? Ask me, and I'm gonna help you with that. Ask me your questions and I help you because I've been in live for an hour and I'm tired. But let me your questions there and I help you. Um, where the look where the price is actually reacting on this order block. Pin. That's why the price enter here. Boom, and continue pushing up. Hmm. I think the price will get to this order block now. This demand zone, and I will need a 5 minute confirmation here. And if I got a 5 minute confirmation, that would be actually cool because I will be able to continue buying. Okay, this is a question. When I use fractal, can't understand which should I follow. Fractal. Which fractal to use? When I use fractal, can't understand which I should follow. Can you elaborate a little bit more the question? Because I do understand the concept of fractals. In fact, this is what we have been working with this today, complete with fractals that I call differently. I call them fractals of ranges. I call them ranges because it's the range in which I'm gonna work with. Uh, but elaborate a little bit more the question and or give an example, right? So I can understand that better and I can help you. I can help you answer that question, right? Because I may think what are you referring to, but I need more clarity about what you're referring. Okay, so leave the question there. Okay, there was a 50-minute range. We got a boss here. Boss, perfect. And now, yeah, elaborate a little bit more the question. And no worries, I'm gonna help you, but give me an example to help you. Okay, Harsh and Barsni, so I will be able to help you better. 50 minutes. So this is the 50 minutes range. It was broken with the bottom of the candle. It took 4 days for the price to actually break the high. 4 days. A lot of patience, right? And now where the price is reacting is in this order block. We know that. Here it is. Perfect. This is 1 hour order block to 50 minutes. Near, then I confuse which should I follow. Ah, wait, this is some per day is too near, then I confuse some paraday. Let me I don't know what is paraday. Let me check what it means. Ah, yeah. Ah, premium and discount zone. All right, okay, gotcha. Uh, gotcha. ED array. Mm-hmm. Yeah. Right, guys. Look, this is the answer. So, some premium and discount array is near, then I get confused which should I follow. I gotcha. I got your question. Block or fair value gap, anything. Okay, gotcha. Good. Hmm. You see what I have here, right? Look, this is the context. I'm gonna put it here in bold letters. This is the context, right? So the context help you understand the major impulses that you have in the market, right? So I'm gonna explain it. Wait, I'm gonna explain it here for you. So the context you're watching here is the next. I'm gonna go from 1 hour time frame, not in order not to make it difficult to understand. So if you can see here, we have 1 hour. This is the 1 hour fractal, and 4 hours, which is bearish, right? Now, according to the premium and discount zones, right? I'm gonna use this Fibonacci tool, right, to mark it. So all that is above the 50%, so this point, all of this, it's supposed that we have to sell, right? And under this, we need to buy. But what happens if we go to 50 minutes? This is in 1 hour, right? This is the 1 hour impulse. This is the fractal, right? But if we go to 15 minutes, in 50 minutes we see a different story. In 50 minutes we see that this is the impulse, but we are above. We should sell here. But look, if we have sold in this zone, we'll be out. We will be out because the price would take us out, right? So if I'm honest with you, I don't use this PD array because from my understanding, they are useful to understand where the market is allocated, but doesn't fit with the analysis I have, right? Because as you could see, it's not valid. Look, if we have used I mean the PD array right here. I'm gonna mark it with the Fibonacci tool. So all of this is premium zone and this is the discount zone, right? So if in 1 hour is very clear, so this is the order block I would like to sell, right? I would like to get to this order block to sell. But what is the meaning of that? So if in 1 hour we are bearish, in the lower time frames like 50 minutes, 5 minutes, we should be bullish. Bullish until it gets to the order block in 1 hour, and then we can continue selling. Because it depends a lot where you put your PD array, your premium and discount zones, right? I don't like to use that tool at all because what I do is that I mark the order blocks, for example, the extreme or the decisional order blocks, and they are automatically in the zone. So those are premium. Sorry, these are discount order blocks. So order blocks in which the price will have a reaction. And as you can see, once the price hit this order block, it went down because it's a discount order block, right? And what I'm expecting is when the price get to this order block, it goes down as well. Now, if you look these order blocks that I marked here, these ones that are here, this one, the blue ones. So when the price get to this order block, to this one, those were premium order blocks. It means these order blocks were valid, and that's why the price continued pushing up. So the PD array, from my point of view, is a basic concept, right? And to select properly the order block that would have the reaction, you need to understand a concept that is called liquidity. So it means money. For example, why this order block, this one, or this one I have here, or this one, didn't work. I mean, according to the theory, it should have a reaction. This order block, when the price entered to this order block, the one I'm marking here, it should have a reaction for the price to go down. So the reason why this order block didn't work, it was because it had liquidity prior it, which is the liquidity, these highs. This curve that I'm marking here, it's highs in which the people think they can sell there, but because they think there are triple tops, double tops patterns to sell, there are money. So it means, in other words, here is a lot of money. So here is a lot of money. So there are plenty of stop losses. Here is a lot of stop losses. People are selling here a lot, selling. So to put an example, a short, right? People put a short here. And what happened with this short? They put it in the next high, which is this one. They would put their stop loss. And look how the price actually takes all the money from them with this huge candle. These two candles sweep all the people, took all their stop losses. And what the price actually did was that it reacted on the order block that has no liquidity. So this order block, this one has no liquidity. That's why the price entered, took the liquidity of this one here, boom, take the money out, and then start a retracement. And this is how you actually understand which is the correct order block or fair value gap, right? I do understand also the fair value gaps, but the fair value gaps is also money trap. So for example, you know that, can you see, I think you, my friend, you can see this fair value gap right here. Oh, jeez. Look, this fair value gap here. You know what means the fair value gap? Money. So there is money trap here. So what happens? This high becomes liquidity, right? This high becomes liquidity. So people are watching this top here. Look, this top here, this high here, and this one here as a double top signal. So now what are people doing? Selling. They're selling here. But what they don't recognize is that here is money. Here is money accumulated. There are plenty of money there. So people will continue selling. But in this analysis I'm doing, this is what I'm thinking. I am buying. I am still buying, right? And I will keep buying. So I will buy until this order block, or even above. Can you please explain in gold? Let me finish this and then we can go to gold. Okay. I just want to finish. This is the last day. This is Friday. Okay. Let me do the exercise with Friday. And with this, I'm gonna let you. I'm gonna uh, show you how this theory works. And power of nature. If you want an analysis from gold, tell me what day you want to see, and we can analyze it. Okay. Perfect. So okay, this was a 1 hour order block and a 15-minute order block. So here I will wait for a 1 minute confirmation, and I will keep buying. Let me check if the price provides me the opportunity. It will be really cool, and I will be and I will get really, really, I mean, with you guys, I will be approved by you. So look, this is in 5 minutes. We're in a cell. In a cell. This is okay. This is an example of the fractals as well. Look, this is my fractal or range. This is how I call it. This is my 5-minute fractal. So I'm gonna wait for the price to break the fractal or the range. Boom. Then I will wait for a confirmation, and then I will buy. That's what I will wait. 5 minutes, yes. And in 1 minute, let me check if 1 minute we got a confirmation. We did. Here it is. 1 minute confirmation here. Boom. Took this high. And now let me check where is the beginning of the range. Here it is. Ooh. Okay. There you go. All right. Boom. So it's pushing up. Perfect. And now it's making a retracement. So now I'm gonna put an order here. So the power of nature says Monday, not Friday, my bro. Okay, gotcha. No, it's because I'm doing backtesting today, right? That's why. 6 pips. 5 pips. Yes. Why here? Let me check one thing. We are in an order block trump, which is this one. Yeah, give me a sec. Give me a sec. I'm gonna help you. No, no worries. But let me see if this order actually works. All right. Let me check. What? Okay. I think it was opened or not. Hell no. I think it wasn't it wasn't opened. No, it was not open. Anyway, let's wait. All right. Hold it. Hold it. Hold it. Right, it's ouch. So it went a little bit down. Let me check where. It went maybe to this order block. Here. Oh no, it went down. Way down. Never mind. So the retracement in 1 hour is stronger than we expected. And it's fine. It went to the order block here in 50 minutes. So for example, I was out here, normal. And if you can see further in the future, the week finishes here. But for the next of the week, look. This is what I was referring to. Yeah, it wasn't in the point I was expecting. It's normal. But later, next week, it go down a little bit and then it took the liquidity high of the highs here. So this is it. You see, this is it. So all the money that was trapped here actually was taken by the price. We were out, and that's normal because this is part of the analysis process, right? It's fine. So that was Friday. Friday is not the best day to work with, and that's it. So if you looked for the analysis, just to finish, I'm gonna help you, power of nature. Don't worry, I'm gonna help you with the analysis. The first order we got was here, 1 to 7. That was the first order, a 1 to 7. It was a really nice order. We didn't want to wait for more. The second order that we lost was here, and the third one was here. So if you make as an analysis and you summarize this, you got a risk to reward to 7, and then you subtract the 2 losses. So at the end of the week, you got a result of plus 5%. Yes. So when you got a plus 5% of the week in 1 week, right? It means that if you constantly can create a 5% of an account, right? Uh, in a month, you get the 20%. And bro, that would be too much. That would be too much, right? So anyway, I gonna help you. So it says Monday to Friday entry. Can we use premium discount while entry? Mm, no, it works more for the higher time frames. In lower time frames, not that much, because lower time frames are there to distract people. Yes. All right. So let's go to gold. Where is the enemy of many traders? Here is the gold. Right, guys. Look, this is the analysis I gonna do. Oof, this is going down so freaking hard. Great. So plenty of opportunities. I don't know so much because I don't execute orders on the gold, but this is my analysis. Look, uh, what was your name? Harsh Varsny. You said that you asked me a question about the fractals. Here's an explanation of the fractals in real market. So look, you know the fractals, guys. You know fractals repeat itself once and over again, once and over again. So look, I'm marking here the daily time frame fractal, right? Gold is my favorite. God or gold? God is also my favorite. I believe in God, so and in gold as well. Perfect. So here it is. This is the fractal. We have a bullish fractal. You see, this is a bullish fractal. Bullish. What happens when we have a bullish fractal? We have a normal retracement. The thing is that in your gold, the retracement are insane, but the theory works as well. So according to the theory of the premium and discount, we can mark the next. So all of this is the premium zone, sorry, discount zone, so discount, and this is the premium zone. Premium zone. Use my English, guys. Now, you say, perfect. What are the order blocks we need to bear in mind? So remember that I told you that the order blocks that I select are the order blocks that doesn't have liquidity. So if I go back here, we see this. We see this order block that has something that is called order flow, and then it allows and provides this order block here. And look, this is insanely precise. Yeah, that's it. This is the order block. Why this order block that was here? The order block that was here. The order block that was here. There were plenty of order blocks. And the order block that was here. Why didn't these order blocks work? We have 4 order blocks. All of them were in the premium zone. But why they didn't work? Because all of them had prior liquidity. So money accumulated, money accumulated, money accumulated. And the only one who didn't have money accumulated was this one. Right? So that's why we got such a huge reaction from the gold. So all the people who were selling here, unfortunately, were out. And I don't use premium and discount zones because I already understand it deeply. But when I started the concept of trading and smart money concepts, of course, I used it a lot. So this order block worked, had a reaction. It wasn't strong enough to continue with the bullish impulse. So it made it sorry it started a retracement. This became liquidity, this low, and that's why the price went to a further order block, and now it's having a reaction here. You see? Perfect. Now let's go. This is the daily. This is the daily map. So let's try the context. Context. We need to understand the context, my friends. So context, because if you don't have context, you get lost. You get lost in the fractals. If you don't have a real clear context, you're out. You're out. The price doesn't have any compassion about you or any of us. So it simply takes us out and all our money. And the money is for those who can understand well the price. Simple as that. So this is the bullish 4-hour time frame. They go to 4-hour time frame. Yeah. Keep the calm, my friend. First, we need to analyze the context. If you go right away to 50 minutes, you don't understand because you will see just the small picture, and then you won't be able to understand the rest. So patience. So let's try to find a fractal in 4-hour time frames. So in 4-hour time frame, this is the fractal. We have the supply zone, and here it is. Oh shit. So look how interesting. In a bullish time frame, in a daily time frame, we're bullish, but in 4-hour time frame, we're bearish. That's right. So 4-hour time frame, we are bearish, and this is the picture we need to understand. Okay, good, nice. Let's go to 1-hour time frame, and let's try to find again our fractal. I think I already saw it. Give me a minute. I am analyzing. I'm working to give you the best service. Wait. I think this. And I came here. Right. Look, some people would say that this would be the high in 1 hour. I don't. Because there is no order block to back this up. So since this is not the proper order block, I'm gonna look for another one. This is too many highs, so this is liquidity. All right, here it is. Here it is. There are plenty of opportunities in the goal. There are plenty of opportunities in the goal, by the way. Look, this is the range beginning in 1 hour. So it's completely abrupt, the movement of the gold. Give me a comment frame. I'm gonna go to you. Yeah. So here it is. All of this is the 1 hour impulse. This is the 1 hour impulse. Super strong. All right. And now let me do the next. Remember that this was the daily order block. Let's refine it. We need to refine the order blocks. here to 4-hour order block here. There. There. So in 1 hour, or this is the 4-hour order block. So this is a daily order block refined to 4 hour. Perfect. Right, so we know that now. Let's keep creating the context. In 1 hour, we are 1 hour bearish. Bearish. Now let's go to the time frame you want to see, my friend. 50 minutes. Let's go to 50 minutes and let's see what actually happened. Let's go, let's go. All right. So this high is the 50 minutes range. No me gusta. Yeah, here it is. Look. Boom. Range beginning. Perfect. And it's going down super, super strongly. And here we apply the same concepts of the premium and discount. So if you use the Fibonacci tool, the Fibonacci, all right, we got here. So we are in a discount, discount area. Discount, and this is premium. So personally, this is what I see. The price is reacting in this order block. This is is reacting in this order block. That's why we having this reaction. But I want to ask you a question. You guys, you have been here on this session. Do you see money here? Do you see liquidity? Do you see the money, or do you don't see? Do you see it? Do you see it or not? Tell me. Can you see the money or you can't? By the way, in 50 minutes we're also bearish, but this is what we need to understand, that we're in a bullish retracement. We're in a bull rate. We're in a bullish retracement. Hey, the question, did you see the money? Can you see the money? You can't? Can you? No? Look. This is money accumulated. Here is money. So look what people are watching. Other traders, not you, other traders are watching the next. They're watching this and this. Yes, perfect. Listo. Muy bien. Congrats, my friend. So other people are watching this trend line. This is my perception, and this is what I think the price can do. I want to see one thing in 1 hour. Sorry, guys. Let me go. Let me see the next. Oof. The price is reacting on this 1 hour order block in this one. Well, good. So anyway, this is what I think, my friends. 1 hour. Look, in 1 hour is clearer. Can you see this fair value gap? Fair value gap has money. Fair value gap has money. So I think the best order block is this one to sell. So I think people here are actually selling. People is selling here because they saw this double top. Look, people is selling here. Here is a double top, they sell, and then boom, they were out. it continue pushing up, right? Um, Now the projection. This is what I think that may happen in the gold. I don't execute gold, by the way, but this is what I see. Here we can have demand. Look, in 50 minutes, this is what I think that could happen. This is the order block that has, look, now this is the order block that has no liquidity. I mean, you see the fair value gap, right? You see the fair value gap. Fair value gap means money. So here is money. Here is money trap. And also in these highs here, there is money here. There is money accumulated. That's why people are selling in this moment. So what I think is the next in 50 minutes, the price can do the next. Yeah, it's having a reaction here because there are people watching a double top, a double bottom, sorry, double bottom. So boom, they're out. Then when you think the price is going down, boom, take you out. So this is what I think that could happen. And in 5 minutes, yes, this reaction is not back up. So this is liquidity as well. This is liquidity for me. This is liquidity. So I think maybe tomorrow, all the money that is trapped here will be taken. Boom, all this money. There's money. There's people money buying. So we put an order here for the sake of the exercise, definitely. Like this. I don't know how much is this. Is this too much, pips? I don't know. 75. Kind of. Yeah, it's kind of a lot, right? Even I'm gonna be sharper. I'm gonna refine this a little bit more here. Put the order block here. Nice. And put this order here. There. 46 pips, more or less. Right, so this is it, my friends. So this is the prediction I have for the gold. So tomorrow, tell me if that worked. Because here is what I see. Oof, it looks really nice. This is a 1-to-7 order. A nice risk to reward ratio. All right, so this trend line, don't get trapped by the trend line. So there will be people selling in this trend line. So this is the analysis, guys. Do you have any further question? Because I have to go. So this is the analysis. It's a great opportunity. Is that too much? I'm not so sure. 6. No, it says 40. I don't know how much it is. 46. 46 stop loss. Yeah, 46. It's for you, friends. It's for you compare with the 345 you're gonna got here. It's a lot. It's a really good one. Yeah, so yeah, this is I'm covering this order block, 15-minute order block, a little bit of this order flow here, and that's it. So my prediction will be the next. So the price could do the next, and this is what I think it would happen. The price may go a little bit up, then it will cause like a triple bottom pattern. People will think it would react, then it will go down, and when it gets to this point, it will react harsh, super fast like this. Then I think this will happen in London and in New York session tomorrow. People would see this trend line and then another opportunity and boom. So this is it. I'm gonna let this like this. So this order will be for tomorrow. For tomorrow. Today I wouldn't risk or take the risk to, maybe you can sell, maybe you can sell here and then wait opportunities to buy. But well, it's up to you. All right, guys. So this is it for today's backtesting session. If you have questions, um, I have I'm on TikTok. I always upload videos on TikTok and in TikTok and in Instagram or Facebook. So you can write me your questions there. And if you wish, we can continue doing these backtesting sessions, okay, to help you understanding more about the smart money concepts, right? Remember that I also have a YouTube channel that if you want to understand these concepts of trading, look, if you want to understand more about this, go to my YouTube channel, which is here, Smart Money FX, and here you will find well, everything about this, about my channel, right? Subscribe, guys, hit the button, hit the like button, all that stuff, and especially share with friends. Special is share with your friends, okay? We have no TikTok in India. Sorry. Okay, so go to this big beacons link and you can get to my Facebook or to my YouTube, right? And I will be here to help you with all your questions. All right. So this is it, and I'll see you in the next back testing. Thank you so much for being here. Okay. See you, friends. Thank you so much.